Steve, Andy, good afternoon.
Hey, thank you, Scott. I had to sneak something in there real quick on the screen, but hey, everybody. Hello, Andy.
Hey, Steve. Hello,
Hey,
Scott, and everybody out there.
thanks for tuning in for the the Tuesday edition of the afternoon webinar series, Trade of the Week. Get right into it. Smart people probably know they can trickle in a couple of minutes late and miss this first slide, the disclaimer. Every week we remind you guys we're a software company, subscription service. We're not investment advisors. We're not brokers. We're not here to manage money. We're here to help you guys manage your own money. So please, that said, don't construe anything you see or hear today as investment advice. We'll talk about a few things that we like that we're looking at and explain why, but again, please don't construe any of that as investment advice. All right, lawyers are happy. The reminder that our 14-year-old program is very much in depth, and the learning curve is doesn't happen overnight. It takes a few days, maybe even a couple weeks, but the afternoon webinars like we're doing now, the morning trade ideas universities that we do, and the Friday support session, and especially the live trading room. We'll have to update this slide when Barry gets a new screenshot of his new platform, because it's a good deal if it's being received well. It's no longer using this Omnovia platform. So if you haven't been to the room for a while, this old link won't work. You're going to need to grab a new link from us that'll work going forward. But he's there Monday through Friday, bell to bell, sharing his desktop and showing trade ideas in front of a few hundred, sometimes 400 or 500 people in his room. And there's a handful of good traders in there that kind of take the lead and add a lot of value and make that a quality room. So it's giving a lot of paid rooms a good run for their money when you consider that this is a free part of the trade ideas ecosystem. And again, going back to the point that it's just another way to help get people up to speed and learning as quickly as possible. Barry does a great job taking time to answer questions in real time. In fact, a lot of times in our support, if something needs to be demonstrated visually and we don't have a webinar going on, Barry will jump in and say, hey, just send them to the trading room. I'll show them. So if you weren't aware of that, take advantage of that, because Barry's very gracious with his time. Again, mention the afternoon webinars. As you can see there on the slide, this is the Trade Ideas Trade of the Week focus. Q&A demo tomorrow with Brad and Dan. Generally on Wednesdays, they show kind of what's coming around the corner. If not, we have guest webinars usually on Wednesdays. The trading studio, as is right now, is with Andy and Jamie. Usually talks about what's going on in the market on Thursdays. And then our Friday support session, as I mentioned, is really important as well. So here's another 3 hours that we make ourselves available for only those that want to come in and ask questions. Basically the same format that we're in right now, go to webinar and using the questions box for interaction and questions and comments and need for explanation. So you can come in any time during those 3 hours on Friday and keep the ball rolling with content and how do we do this, guys? How do I do that? If I want to do this, how might I go about that? And you can even pull up a chair and just learn from other people's questions, even if you don't have your own question. There's always something to be learned on the Friday support session. And then at the bottom here, TI University, which is basically this slide. It's every Monday through Thursday, repeats every Monday and goes through Thursday. We just finished the 201 session today, so we start off with some beginning content and get a bit more in depth by Wednesday and Thursday. Jamie is showing you how to back test strategies and get the most out of them on the more in-depth stuff. So those are always live, and they're always recurring Monday through Thursday at 12 noon. We do it during the market to demonstrate things. All right, all of that out of the way. Again, thanks for joining, guys. The theme for this webinar typically is this one right here, man and machine combined. There's a great quote by Paul Tudor Jones there on the screen. It's funny, I was talking with Brian Shannon about this, Andy, in Breckenridge, and I said, oh yeah, that's a great quote. I use that in my webinar, and Brian looked at me and he goes, you do realize I gave you that slide, right, Steve? I completely forgot that he had given it to me. So again, thank you, Brian Shannon. It's a well-versed slide.
Funny.
Yeah, I'm sure you could see me saying that. Completely forgot who gave it to me. Talking to him like, oh, it's the greatest slide. But again, just a quick reminder, guys, we're moving forward into the brave new world. We are, as humans, are going to have to work hand in hand with machines and data processing known as AI, machine learning. And it's not a bad thing. Some jobs will be lost, others won't, but we're going to become more curators of let me rephrase that. We're going to become more decision makers based on curated data. The AI is going to give us curated data, and we, the humans, have to make our decisions and our discretionary decisions based on what the AI is presenting us. And you can see it coming across the horizon in many, many boards. Obviously, finance here, healthcare, helping with oncology and fighting cancer, coming soon to sports gambling, other areas of big data being processed and honed down to a small list, and whether it's using our custom formulas to have trade ideas tell you what it is you want to see, or have trade ideas have the AI tell you what it thinks it is seeing as a idea generator. And that's it. That's why we're called Trade Ideas. We do idea generation here. So on to the webinar. Typical format, we'll do a market recap. I'm using the word poised today. There's really not much of a bear case to be made at this point. We'll talk about that shortly. Active day in the Holly land. Andy will recap some thoughts over there. Trade of the week did trigger pretty much on the open yesterday. It's a software company, AYX. We'll talk about the thought process and the genesis of how that came about, what it's doing now, and how to keep an eye on it. I've got some definite thoughts on that, so stay tuned for that. I like doing the sector glance. It's always interesting to see what sectors had a good day and what sectors might be ready to come in behind and take the baton from the leaders as the rotation just kind of continues. That's how upward markets move. And then we'll set some new alerts. You know, honestly, the last couple of weeks, there really wasn't a whole lot of alerts that we felt kind of worthy of setting and sending out there. But, you know, in a moment here, we'll look at the major market recap, and you'll see the general backdrop is not bad for the bulls right now. They're looking pretty confident, I think. And so there seems to be a bit more interesting setups out there. So we've got 6 or 7 that I'll mark up and give out on the shared price alerts. All right, so what I was trying to sneak in earlier was this chart of lift. I was going to do some technical analysis on lift here, Andy. Basically, here's your channel. All right, guys, have a good day.
I usually like a few more candlesticks than that.
Oh, okay. Well, I did this yesterday too, and it was fun. But you know, just a quick reminder. The bag holders are the people who wait for the IPO of their favorite stock to come out and buy it. And if they didn't learn their lesson in Snap, well, they're certainly learning their lesson in Lyft. Now, I will say Snap's kind of making an attempt to recover here, but it doesn't make the people who bought it on the opening day at 27, 28 feel that much better, especially as it went down to $5. They're wondering, what the hell did I get into? You know, Blue Apron, another popular process service. People who bought it on the IPO were just kicking themselves. It's a dollar stock now. Fit did the same thing, even though it's kind of trying to base. But the point is, guys, you might get a second chance to buy these IPOs. If you're the buyer of an IPO, you're basically helping these insiders and venture capital and early mezzanine investors. You're helping them get their exit strategy so they can buy another house in Aspen. Not to say that Lyft's not going to be a bad company, but I mean, my God, for those who bought the early head fake here on the open, they're not real happy being down this much. Yeah, it maybe offered more than its IPO price, but the real rubber hits the road when it hits the market and people start trading it. So one more thought was that there was a company that did the same thing, and you got to go way back to see it. If we just go back here real quickly. Let's do a monthly on Facebook. You can see that Facebook opened up back here at 40, and then when it dipped into the teens, people thought, what the hell did we just do? But, you know, there's the other side of the rainbow. It can recover. But the point is, let's look at a monthly chart of Lyft. Whoops. Monthly chart of Lyft. Oh, straddling the 2 months. That's pretty funny. There it is. So no need to rush into these things. You're just basically helping the early investors take their exit strategy when you buy these things on day one. Don't do that. Don't be a bag holder. So back to where we are here. It's been a long road since the day-and-a-half bear market happened down here, and we've basically the market S&Ps that is have kind of come through everything we've thrown at it here. All these interesting levels. There's the 200-day moving average, this big level down here, and then looking to the left, these levels up here. You know, we got above, came back below, and now we're decisively back above again. If I can zoom in, makes it easier. Really nice gap over the weekend, but I guess it's a nice gap if you're just sitting with a long portfolio. It doesn't make it easy for day traders and people alike to get a lot of opportunity during the day. I mean, look at how many of the last few days here where we pretty much gapped and then opened where we closed. You know, today, forget yesterday, well, include yesterday, it was a giant gap, kind of a gap and then doji there, gap and doji here. Can't forget the nasty neck snapper where we anticipated some follow through, gapped lower that day, and kind of ever since that day, it's been really tricky. You know, if you want to make money, it's almost like you just got to pick your overnight direction and then sit and roll the dice and hope you get it. And yeah, Waleed is correct. Definitely honorable mention. The golden cross is back, not to be confused with its ugly brethren, the death cross, which is what happened back here, and I've often referred to it as, you know, this is the bigger moment where the institutional money managers who are managing billions of dollars, they can't just day trade. They have to make big decisions, and one of the big decision points they make is the price action of the S&P 500 below the 200. In this case, here was our cross. Didn't take long before the price action followed, and then all this work coming back, finally got back above, and here we are. So, you know, if this stays, I might have to make some adjustments in my portfolio over the next couple of days and come out of bonds a little bit and go more heavier in stocks. But that's the kind of thinking and that's the kind of time frame and horizon of these big oil tankers that are money managers. So here we are. You know, what does that mean to us today? Well, it means that there's not much of a bear case to be made left. We had a lot of opportunities back here of getting caught up, prices getting caught up in resistance levels, pivot levels, and moving averages. But it has been a champion. It has fought through like the zombie apocalypse, just heading towards its target. And it's not going to take but a few more closing prices above, you know, this congestion down here before the bears, if there are any left at this point, continue to throw their hands up, because I think what's truly on the table is we're so close to the all-time highs back here in SPYs. We've cleared through all this mess. We're so close. I mean, we're in the neighborhood. I think it's a foregone conclusion in the near future we might be coming back and testing these levels again, because we've busted through everything that we've looked at, and the bulls have cleared every hurdle that's been thrown at them along the way. So what else is going on over here? Let's take a look at the Qs. On these recent highs, we're so close. We've come so far from the bear market down here. We're so close. It's probably going to be the case. We're going to knock on the door and say hello and see what happens up there in the near future. But NASDAQ kind of was leading the way a little bit. S&P actually kind of took the lead, I think, because we're a bit higher than this respective high from 2 or 3 weeks ago than we are in the NASDAQ and the Qs. IWM has been the laggard and still continues to be. It's the only one that's still struggling with its 200-day moving average, can't get above, which could make the case if the market does continue to move higher. Well, then who's the baton going to get passed to? The baton could very well get passed to the small caps and the Russell 2000, which would bring this ETF back to life for sure. But it's definitely been lagging, and it doesn't seem like the lagging aspect of it is going to drag anything else lower. Everything continues to move higher, and it seems like it's going to want to drag those higher. Same thing going on here in the Dow. Pretty significant resistance levels that we're currently at and currently working on. So we'll see what happens in the Dow, but if any indication of the S&P and the Qs are correct, that's probably going to work itself out to the upside. I always like to look at Apple just to see what's going on, and it was kind of funny. Last week, Apple came up like a breached whale, took a big breath of air, and sank back below the surface of the water, only to reemerge again. So you can't kill the stuff; it just keeps coming at you. That's really the only way I can put it. Poised was the word I used. Well, it's poised to move higher into probably challenging those all-time highs in the next couple of weeks. It might do it slowly. This market is definitely 3 steps forward, 2 steps back, but it's chugging along in the right direction. And I don't really see much more in the near-term future in terms of resistance to look back and see back here. Anything you want to add, Mr. Linwell?
I totally agree with you. You know, I've been saying for a while now, I want to see us above, you know, that resistance level in the spiders, 281, I believe it was,
Yep.
for a while now. And finally, we've got 3 days above it now, and Only thing I would rather see would be it trade up to there versus gap. I just really can't. I don't know. I have a lot more confidence in a move when I see green bars versus white space. You know what I'm saying?
Well, one of the
And
things we talked about was this little pull. Whoa, how did that
whoa.
happen? One of the things we talked about was this little pullback here. We wanted a deeper one, but I guess it
Mhm.
was enough to finally fight its way through. So the other question is, like you said on the gap, it made me think, in hindsight, is this going to be a breakaway gap?
Mhm.
Or is this a gap that's going to be filled in the next couple of days? I'm sure we'll find out.
Well, tomorrow should give us a good clue, because are we going to have a go? Today is obviously a pause, almost a perfect doji. Even though I would rather the go be more of a green candle. Still, we have to call that a go, pause, go potential for tomorrow. And if it fails, we may come back and test that gap for sure, Steve. And
Question.
very interesting about that IWM. I didn't even look at that the last couple of days. Notice that it didn't even gap with the market yesterday.
We'll come back to that, but before I do, look at what's missing here today in the S&P 500. Volume.
Yes.
We
Oh,
only did
yeah.
38 million shares. Are you freaking kidding me?
What does it say on your single stock window?
38 million.
I mean,
It
what
says
is the
38.
percentage? I
Oh,
can't see. Oh, I'm sorry. My
with
webinar's
the relative volume is 0.6. Is that what you
6.
mean?
Yeah, it
Relative
seems like the
volume of
volume
0.6.
should be more than that. Yeah, I don't know what's going on there. I bet that adjusts tomorrow.
38
Let me
million is
see.
very low considering we were doing over 100 back here, close to
Yeah,
100 these days.
that's interesting.
Again, it could fall into the go pause go case. You know, big push yesterday on decent volume, and then today is like, whoa, what just happened? And so it's always the second day after a big push.
Yep.
If we take out highs again tomorrow, boy, I'd really hate to be short. I'll just put it that way. Going back to the IWM, yeah, didn't even participate in the gap today.
Or yesterday, yeah. Yesterday, you can see there it barely opened up
Still
above.
fighting a declining 200-day moving average, so
Yeah.
tough
So
treading over
keep
there.
an eye on that. If it does to roll over, yeah, that could obviously have an influence on the spies and Qs. But yeah, we'll see. But
Mind your
looking
spies and
better, that's
cues.
for sure. Looking good.
All right, well, that's all I got on the segment of market recap. Market's poised to come back and revisit prior highs, in my opinion. It's just a matter of when and how.
All right, you may take it.
Sure.
All righty, let me grab it here. All right, guys. Let's talk about Holly. A lot of trades today, more honestly than I'd like to see. It's just the way it happens. You know, we've had days. As a matter of fact, most of the days over the last few weeks, it's been around that total number. Around seems like around between 15 and 20. But today we had 53 alerts. Got to be careful calling them trades. Holly does not trade. Holly generates ideas with alerts. And today, I mean, once again, guys, looking at the market, just no follow through in any direction. Obviously, you can look here at the doji that we had, narrow range, basically closed exactly where we opened. Holly, for the most part, was going long today, but out of the blocks, not a good start. Market dives to lows, comes back, goes to highs, and then pulls right back to almost form a perfect doji. As a matter of fact, let me line that up and see exactly. The close was 97. Now a little bit off a doji, but still close enough for government work, as they say. I think what I'm going to do today, guys, is kind of give you an idea of maybe how you can trade Holly, especially for those who want to automate Holly. We've talked in the past how you might not just want to come in and just turn every. I'm not going to bring up the B plus. I'm just going to work right out of the Holly modules here. But how you might not want to come in and just turn every strategy on and load up a bunch of shares and watch it back and watch it fire away. Where you might want to be more selective, maybe give it 30 minutes, just watching the market, getting a feel. If you see slop like this, maybe you don't want to cut anything on. Maybe you want to be patient. Maybe if it starts pulling back, you may think, oh, this market's pulling back. Maybe I can have an advantage and maybe run some on support, a 5-day bounce, maybe run some contrarian strategies. So don't feel like you have to come here if you do want to auto trade Holly. And guys, trust me, I think we've tried to show you as much as we could. with you that I think could be added to your own strategies in Brokerage Plus. So don't discount that either. But I'm going to focus on Holly today and what you might do. What I've been doing a little bit in Brokerage Plus is maybe buying like a third of your normal size. Maybe if you want to play some of these strategies, maybe buy a third of your normal size. And maybe I'm going to say even go in risk on, because you want the ability to adjust your stops. In other words, if you're on risk on, if the stop hits, you're still going to be stopped out. But if you're only doing like a third of a size or something like that, maybe you can stomach a little more pullback. Maybe you can let the winners run for you and add to your positions when they're working for you. And I'm going to show you a good example of one I saw today, because remember, these strategies, when they do get stopped out, that doesn't mean they're dead. We're talking about, we have a feature that's called re-entry, where you can actually re-enter these trades. But I'm going to show you a way where you can maybe play less size, especially when you're playing these contrarian moves. And you can actually get better prices instead of having a delta that reaches out at a higher price to buy it. Maybe be less aggressive and put like in this instance right here, Baxter, you can put it below your delta below. In other words, maybe you want to get it 5 cents better, 2 or 3 cents better. But what I would try to maybe practice on doing, especially in the early going, is buying small size, because I see a trade like this, and if I'm able to sit around and watch the trade, I can avoid being stopped out on this wick, okay? Because, first of all, it's an $80 stock. I would never probably put a 25 cent, whatever this is, 27 cents, 26 cents looks like, stop on an $80 stock, okay? So what I want you to get in the habit of, guys, is maybe don't take your full position right at the alert, especially on these contrarian plays. Maybe just go in for a third of a size. Then it comes back, you can move your stock down, grab it, move it down, because you're only going in a third of a size, so you have a lot more leeway. And let it breathe for you. And then maybe when you come in and you finally get this bar reversal, maybe then you can add. And then maybe when it goes back through the entry, you can add some more. So what I'm trying to do is kind of get you to flow with the market, especially if you're able to sit in front of your computer the whole time and watch your trades, and don't feel like you have to take, all the trades, at once. Now, some of the more aggressive ones, you may, like this one, you might not make as much if you're only taking a third of your position. But I'm talking about more on these pullback alerts. Maybe don't get more aggressive and just take a smaller size at first. Now, if it's a stock like this and you see a chart like this and breaking through, doing a bar reversal after about, 8 days in a row down, and you see that, maybe you can be more aggressive. This is from a strategy, a 5-day bounce. So it's really not buying a pullback. It's looking at a stock that's already bouncing and moving. So this is a little more of a chase than a contrarian play. I hadn't even really looked that hard, but and then when you get stocks maybe that that don't work, or well, that one actually did come back. If you had a re-entry on that, you would have done pretty well on that one too. There's another one that you probably, if you took 1/3 of a position, you wouldn't have had this tight stop in, and maybe you could have added lower and let it breathe a little bit. Because remember, these strategies are not just for the time frame from their stop. A lot of these can work throughout the day. And one more thing I wanted to mention, in case I'm sure you guys have noticed, we used to show you risk on when a stock would get stopped out and then it would bounce. We would calculate the risk on after that. We've quit doing that, and I'm sure you're aware of that. And the reason we did, guys, is because we did not want this to become an issue down the road. The reason we were showing you that, and I said over and over, to let you know, guys, what where the stock would is. So like if you're just looking at this and you don't go in and look at Baxter, you would never have known that it bounced like this. But when we were showing you risk on, you would have known it because it's calculating the profit all the way until the close of the day, so you could see it in this column. Okay, and the reason I'm telling you this, to make sure you know, is so you can go in here and look at these in case they do get stopped and there's a bounce coming. Maybe you can play that for the second time around. If you're just looking down here, you're not seeing the calculations anymore. But we thought it was best to do this for you know, for several reasons. We didn't want to mislead anybody. We only provided the risk on column so you would get an idea of where the trade would be after you stopped out. Okay, so Wally, yeah, Wally, Riot killed me today, but you know what's funny, Waleed? If you took the reentry right here, it never really stopped out. I noticed that today. It never really went down here back to the stop price. But I would understand why you would have gotten out. It just, you know, it came right back and didn't work. But
It'd be a tough overnight hold there.
Mm-hmm. But I think, guys, you know, the reentry concept is good, but I really think if you would think about, especially if you have, you know, hopefully if you're trading this, you have a per share commission and not a per trade commission, because you're really going to get hurt if you have a per trade commission. And you start thinking about pulling back your size and taking at least half a position maybe at the first, and I would even go as low as a third. I've done that all the time throughout my trading career. You know, see something, just buy a little bit, starts working, hey, I'll add to it. You know, make one comment about adding to losers. I don't think there's anything wrong with adding to losers as long as you're not doubling down. Now, when you're doubling down, what you're doing is you're buying a full position right here, and then you feel the pain, and you're just going out and doubling down, you know, for hoping it bounces. That is wrong, okay? But if your strategy is to only buy a third of the size on the way down and then add to that position, I don't feel like you have to do that once it gets in the money. I think you can, you know, in other words, what you're doing is you're basically averaging in. And I know you're buying your second position when the stock is down, but like I said, if it's part of your strategy, I will condone it. I mean, it's, or I will not condone it.
Correct.
Yeah, there we go.
Condone it.
Yeah. But, so I don't want you guys to think I'm encouraging doubling down. I'm not doing that, okay? Just remember, it's all about easing into a trade versus going all in at once, and then once it gets to work for you. Now, I don't think you should buy two of your positions down here. I think that if you're playing a third of a position, I would not buy the next third until it went back through my first entry. But anyway, Steve, I don't. There's a lot of trades today, and there were some good ones. I don't really want to go through and, you know, cherry pick the good ones and show them, because, you know, all in all, not bad, just nothing. With this many trades, obviously it'd be tough to be, you know, profitable. Even though Holly Neal had a pretty good day, these two are basically flat. A lot of churning going on, but I want to talk about that.
There was one really good short fade I really liked. Rudy.
Mm-hmm.
Rudy.
I did. I thought that was going to work.
Yeah, it came out in two segments at the same time, and a really nice entry. And I'm kind of hoping some people got some decent fills on that to get a feel for that kind of a jump rope of an entry of a trade. I don't know if I'd sit long that thing the way the daily chart looks, but it was an interesting
short.
Excuse me, thank you. If I'd be sitting short, looks like a pretty decent chart there, breaking out on good moving average spread. But yeah, that was an interesting one for the intraday. The AI pegged that entry pretty good.
Liz, I don't think I have Sean's Holly hot picks. I bet Steve does, though.
Actually, I don't either. If you want to email info@trade-ideas, Sean will
get it to Sean.
He'll get it out to you.
But all right, I'm going to shoot it back over, Steve.
Okay. Right on. All right, and I got Rudy on my screen. So now, whoops, I forgot to accept the screen. Hold on. There we go. All right, so we'll move on here to trade of the week. And the trade of the week, first off, the backdrop, you know, considering the golden cross in the backdrop of what the market was doing, considering everything that we had talked about already, I'm going to go ahead and actually, let's see here if I can do this. Perfect. This is what the SPY looked like going into the weekend. You know, this Thursday candle was still underwater and still under some critical levels, but boing, Friday popped up, actually closed above a nice wedge. And it doesn't take much, probably in the overnight news, in this case it was some China stuff, to really just spark a weekend gap up on Monday morning here. So again, going to the way the market looked here on Friday, definitely wasn't going to be looking for cash or any type of short strategies. The setups are there, And so going to the composite rating, again, the scan looks for stocks that are scoring in the 90s up to 100. These are A plus, A and A plus type scores based on fundamental metrics and based on mostly technical metrics as well. So you can see it was on there on Friday and still remains on there. Now, I want to call a couple of interesting things here, talk about this. You know, the golden cross in the backdrop was in our mind. The strength of the software sector was pretty strong as well. This is a software stock. But boy, when you talk about stocks having a personality, this one has a personality, and I think I can kind of see what's going on here. Again, the composite rating scan looks for stocks that have lower floats. In this case, it's 38 million, and 23% of that 38 million are short. And what's really interesting is the wonderful display here of the bottoming tail phenomena. All right, not only the bottoming tail phenomena, but where it's bottoming. It's bottoming out on our beautiful, simple 10-day moving average. So out of the last few days, 1, 2, 3, 4, 5, out of the last 7 days, we've had 5 touches. By touches, I mean a pullback, and typically these are in the morning shakedowns, trying to drive the price out, run the stops in the morning. But what happens, and this is my contention here, there's so much strength just looking at the footprints in the sand, you know, these bottoming tails, one after another after another. I mean, yesterday on the open, I said, oh boy, Andy, it just triggered, and look, it's immediately doing an opening drive. Well, where did that opening drive stall? Where did it, you know, stall out yesterday? Pretty much just under the 10-period moving average, and then bouncing back up. Today, small little opening drive after up, but the opening drive down the first half an hour. Where did it stall? At the 10-period moving average. Looking back, perfect on this day. So I think we've set a pattern here, guys. We've identified a personality of this stock, and we basically set a pattern. And that pattern is going to allow us to have a good risk management. Meaning, you know, going back to the content of the email, the downside is a closing candle below the rising 10-day moving average. Well, I don't even know if I'd wait for a closing candle. I'm going to talk about the bad first on this one. The bad is these types of setups, and Andy's going to shake his head yes. If they fail hard and they fail ugly and quickly, all right? The volume's been kind of weak, but I'm going to focus on the price action. So what I'm going to say is here is tomorrow, look at how we never really got much more below on the daily chart as our guide here. We really didn't get too far below the 10-period. And I'm guessing this is on the opening drive in the morning. So tomorrow, if we have an opening drive down to the moving average, okay, we got to just sit back and say, that's the personality of these stock. If it doesn't, and it continues to drive through and basically takes out much more than these little wicks have barely tickled below the moving average, it might be time to leave. I think this thing is at its do or die point right here with the way this thing is shaping up. Not a real fan of the declining volume, but we'll keep that in our back pocket. I just want to help you guys manage the downside risk. If tomorrow you see the trade going, you know, again, it barely went below on this day, the 10-period. It hit it perfectly on this day, plus today. This day it went pretty, not too deep, but if you see the price action dig a little bit deeper than the candle did on this day of the 10-period moving average, I'd probably cut it, and we could say this is a pretty tight trade. This is a very tight downside stop on this because we're inching out on the tree branch here, guys, and when the tree branch breaks, it'll break hard. And we don't want to stick around and be a deer in the headlights on these types of breaks. This is nothing similar to, like, you know, a trend change lubricant stock not working, a stock that's coming out of a downtrend. They're not going to pull back and break as hard. But ones like our trade of the week here, it's out here on the tippy top. This is all-time highs, so that brings me to the next point. What I think is happening is, why all this buying on this pullback? Well, I fully believe it's the panic of the short sellers. You know, the short sellers that have decent stock to get out of, they got to buy it back. And if they're smart, they're not buying it back near highs. They're waiting for it to come on sale in the morning. And the last 5 out of 7 days has demonstrated when AYX goes on sale in the morning, buyers are going to come in and prop up this line. Now, it's my contention that what we have here is a short squeeze in the happening. We got 23% of a rather small float, 38 million. So I kind of think it's the short sellers using every opportunity they can to cover as much stock as they can before, knock on wood, we hope the inevitable, you know, breakout above this level right here. And this would be all-time highs. And if you put yourself in the position of a short seller, you have to ask yourself, with everybody else being short and a stock composite rating of 98, this thing is about as solid as you can get. Why are so many people short? And I think this is them covering. So everything still looks good. It seems to give us a couple of fits and shakes in the morning, but keep an eye on tomorrow's opening. I feel like we're getting close to some sort of a resolution here. And if we can get a break above that orange line, ideally we get some panic, and panic in the form of losing short sellers, losing money. Just like stocks break for the longs, they take the elevator down on really bad days. Well, this could be a really bad day for the shorts if they're not careful. I think this is them trying to lighten their exposure as much as they can, hopefully, before we test this. And hopefully it'll be tomorrow. Now, if it does go and closes on highs, I'm getting ahead of myself here, but if it does go and closes on highs, try and maybe find a little bit of follow through the following day, and then start maybe taking profits on some or half to lock in, because a day and a half is really all you seem to get when these stocks go in motion. So that's the genesis. That's where we found it, this particular scan. I believe the scan is on channel 4, isn't it, Andy? It should be available down there.
No. But
it's not, I'll drop it in here because mine has a little special secret sauce. There's no custom formulas, but the secret sauce is this. We've got the composite rating, which we key off of, but I'm putting a filter in here of a short selling percent short. 10% short the float. Anything under 10% won't show up on here, but anything above 10, I've got color coded in darker green and sorted. So up here near the top, we got WWE Worldwide Wrestling is getting close to a possible short squeeze. This one's putting together a nice day. It's in the middle of a short squeeze coming out of there. So I copied. I'm going to go ahead and paste here the composite rating. And the secret sauce is really sorting by short float. So the ones towards the top have more possible opportunity for a short squeeze for a nice day and a half of movement than the others towards the bottom. But that's it. That's our trade of the week. AYX, again, keep it really tight here, guys. If it fails, it's going to fail quick and hard. Don't turn your back on it. But if it goes, maybe we'll get a nice day and a half of momentum out of it. All right, just catching up on questions here. Sure. All right, yeah. Well, he'd always trying to give people the worst case scenario, so you're not a deer in the headlights. But yeah, this one we don't want to flirt around with. If it breaks this moving average and goes too far below, especially midday, we expect it to test it probably on the morning. It's just how stocks trade these days. But if it rolls over midday, I'd be a little even more concerned there. All right, so with that said, let's move on to, I think we're just going to look at some sectors next before I've got 6 or 7, sector glance. I like to look at the dailies here, and like I said earlier, remind people that these markets go 3 steps forward, 2 steps back, and that definitely involves a lot of sector rotation. You got semiconductors strong one day, and then they pass the baton to the financials, and the financials are strong one day, and then they pass the baton to the gold miners. Let's just go down here and see where we are and see what might be. The focus is to see if we can find a couple sectors here to put on the radar tomorrow that look like they might be poised. This is a nice bounce. Airlines that were being exhausted, I wouldn't touch that to the long side. Well, we mentioned, I think, last week that oil, the commodity, looked poised, and the last 2 days is definitely showing its true colors after some more noise. But definitely looking decent there. I wouldn't chase it here. This one just is a mess. It's a hot mess in the for 6 months now, 5 months. It's a hot mess of the 200-day moving average. It cannot break away in the biotech sphere. Ask your doctor if biotech is right for you. Do not take biotech if you're allergic to biotech. GDX, uptrend, pullback. Hey, could be ready for a possible baton switch. Didn't quite make a new higher high, big blow off top back here, but it could put in a higher low on tomorrow. We'll see. IYR, we talked about this one last week, didn't we, Andy? This one looked most poised. 1, 2, 3, 4, 5. It was kind of looking like that last week, and we said this thing's just looking for a reason to go higher, and it's creeping higher. So that one's following through as well. No man's land in solars. Gold to commodity again could be ready for some sort of a bounce in the range there. Nothing really major. Gold miners, same thing. All right, here's the brokers. Could be bouncing right up into the pocket and get exhausted again and make a lower high. Nothing really exciting there. Well, technology is pretty much mirroring the NASDAQ, so 2 of them look very similar. Well, this is what was interesting last week as the markets were not breaking out. Treasuries kept going higher, and it was very curious to Andy and myself. But treasuries are pulling back for the most part, sluggishly on this moving average. We'll see what happens. I guarantee. I think if the stocks continue to move higher, this will be a continued headwind on the TLT Treasury. This is the one I just added this morning. The software index showing AYX and some of the others have been pretty strong coming into today, which reminds me, what do we do when we add something? We have to remember to save our layout the way I want it to look. We'll go like that. Just doing good housekeeping here, guys. Good habit to get into. Default layout overwrite. Okay, the reason I did that again was I added something in my symbol list and I want to make sure it sticks. All right, on to silver. Again, could be ready for just a dead cat bounce, but nothing to write home about over there. Energy looked a lot like some of the other ones, bouncing possibly into the pocket. We'll see. It's probably going to have some.
Banks.
What's that? Oh, thank you.
You said energy, yeah.
I did. Thank you. Regional banks. So they got way ahead of themselves last week when we last spoke. The financials, well, they've been bouncing ever since. Let's see what happens here on the bouncing up into the pocket there of regional banks. Semis look a lot like the NASDAQ. Regional banks, we just did those. I'm sorry, the national banks. Home builders, well, just range bound. Nothing really exciting there. Spiders, we talked about those. Agriculture, it's a tough one to really kind of gauge, but it's always interesting to look at. There's our financials bouncing back up, but definitely some headwinds. Interesting, healthcare is kind of painting itself into a corner here. It could be developing a bit of a wedge. But, you know, Andy, I really haven't seen that one sector that's just jumping out to me yet in terms of really setting up nicely. IWM might be that one. You know, you could have made an argument. Oh, I lost my. I drew up my pen, but back here you could have made an argument it was bouncing into the pocket, but now it's fighting through the moving averages. And as we said earlier, if the NASDAQ and the spiders don't want to pull back, they just might decide to drag the small caps up with them. So keep an eye on IWM tomorrow. Dow, we talked about that, nothing special. Now we're getting to the bottom of the barrel today of today's performance. There's energy slowly creeping. Ooh, kind of a rejection wick as oil peeked its head out and returned today. So nothing is really standing out other than the IWM is having a possible shot. Some of the things we watched last week, oil is trending higher, continuing, and the IYR REITs are continuing to trend higher. But nothing really seems super poised at the moment, unless you saw something that I missed.
No, I didn't.
Okay.
Does that mean we're going to have a pullback tomorrow?
I don't know what it means. Chances are we're going to not open where we closed, though.
Yeah, exactly.
All right, so finally on the list here, I did pull a few items from the composite rating, which I shared. I pulled a couple items from the trend change. One of them on there I really like for a long-term play, too. If somebody's just went in the back pocket, a long-term investment, I've got a good one. So let's start with this, since we have it up. Fait accompli was the first one I looked at. Kind of like this little horseshoe it's doing here, gapped up, came down, filled the gap, now it's turning higher. I mean, really, you can make two cases. You can try and anticipate taking out today's highs, that it will go and take out prior highs, but let's just keep it safe and simple and wait for it to take out highs, because there is a short float component in there, and I would like to think that that new high would trigger the shorts. So we'll wait for that. So 1911, we'll go 1912 as our price point. And remind ourselves, there's a short interest of 24% here. And why are they sitting short a stock at an all-time high? I don't know. Not very smart. Ooh, first thing I'm going to do before I do that, let's go ahead and verify. Yes, that would be an all-time high, but I want to clean up my existing price alerts. So we'll take everything from the one we just set and clear these out. There we go. And well, here's where we can edit it. Reminder, all caps, shouting at ourselves. All-time high. That should spook the shorts. Okay, that one's working. Next one, guess what we're going to do, guys? Did you miss AYX on the first round? Well, it's still on here. So let's, well, leave it. I'm just going to say if it takes out this high yesterday, 85, let's go 85.01. This part of our, everybody gets a chance to participate, roughly the same price. Pump and dump, that's a horrible name for a stock.
How about pump up the jam, huh?
Pump up the jam. Okay. Like a preservatives and
No, jam. No, well, I was thinking of it.
no, I know, but I'm saying double meaning on a word. Is it on here still? I was looking at earlier, RPD. Yeah, oh, it just went to the bottom. So this one doesn't have as much short float. It barely made the cut at 10.5% short float, but you can see it is trying. And again, I think we just wait out for all-time highs here and see what we get. Is that all-time highs? Yes, it is. Love it when, obviously, it's probably going to be all-time highs if it's got a high 90% score, but let's take a look.
Close to it, yeah.
Or close to it, yeah. So 52.64 is going to be our bogey. 52.64, and we'll just mention all-time highs. Only 10% short. The float's not that major. All right, so that one's set. That's the 3 from the composite. I actually did have one. We're gonna use. Gosh, what was it? No, it wasn't these. It was on here. Now, why is that gone? I had one. Maybe it. Well, let me just type it in and take a look at it. I thought it was from my bounce, bottoming tail kind of a trade. I don't know. Oh, here it is on washout bounce, this one. So we had that one. That's not really what I'm looking for, but Wing, nice stock that was trending up, really faked a lot of people out. I don't know if that was earnings. I don't think it was. No, it wasn't earnings. But nonetheless, a big bottoming tail today. I think if it takes out today's high, I'm interested. So today's high was
I like that one.
We'll go 73.11. Reversal, he says with a question. All right, and then trend change. Here's the one that I think might be one to put in the kids' college fund. Macy's is a stock everybody's heard of. This is not a fly-by-night stock. This is not a fly. This thing has been taking a beating from 41. It's been cut in half. Literally been cut in half. But it's now finally possibly starting to show signs of a reversal. And today was the first day it really tried to fight itself through its 50-day. I think today's the high. Let's see, 74 versus, yeah, so we're going to go 75. Now, this is one that could be, a decent hold for a couple months, perhaps, only because it's a very well-known company. Also, Andy, I was searching on Let's Go Fishing, and since Macy's is such a well-established company, it was on that scan as well. So double confirmation.
I saw it on there today. Sure did.
Macy's. So we're just going to say today's high is kind of breaking free from these downward moving averages. This is the last one to clear, and of course there is a nice little juicy gap up here, which could be a near-term target for some. But let's go ahead and mark it up, and we've got one more after this, and then we're done. We can call Scott in. 24.75 we'll go. Oh, almost nailed it. I'll even mention here, could be a longer term hold. Good company. And last, also from the trend change lubricant, is NTLA. Let's take a look at the numbers here. NTLA, 42 million on the float, 21% short.
Biotech short.
What's that?
Now. Biotech, so be careful. Biotech.
Oh, thank you for reminding me. I will put that in the notes.
Okay.
Might be a day trade if you get this one because of that. But here is the point. Here's the issue. It closed above those levels, so there might be a little follow through tomorrow. And thank you for pointing that out. We will definitely call that out. Could be just a better considered day trade if there's any follow through. Maybe even a half a day at the most. 1805. We know the drill. 1806. Biotech, maybe just a day hold, not overnight. All right, so there is, I believe, the 6 or 7 that we found. How many do we got here? We got 6. So as usual, we'll go ahead and highlight these and give them out. And if you're not aware, you can accept these cloud links, and they will be absorbed into your price alerts. And when they trigger, they'll trigger for us all together. So price alerts, control paste, and there they are in the chat window for anybody who wants to take advantage. Waleed says, like the analysis and reasoning behind the alerts, learn something new. Well, that's why we come here and do it, Waleed. Love talking about it when it kind of makes sense. It's no fun to talk about when the market's name. That's probably not good. There, now I see a microphone. Let's unmute his microphone. He might be logging back in. There he is.
Intermittent interruptions today. Excuse me.
Yeah, I know. Well, we're ready for you.
Yeah, so a couple items. There's a podcast. You can get ready for the next one by subscribing to Trade Ideas Podcast. Just search for that phrase, Trade Ideas Podcast, in your app that you listen to podcasts on, and add us. Get ready for the next one. We've got an ebook of both Steve and Andy contributed chapters. Very helpful. It's got 5 strategies to help you win in a post-BTFD market. Get it for free. Just go to trade-ideas.com/ebook and put in your email address to get the download link. That code we promised earlier in the webinar that's good this month is April Holly. It has all caps. It's case sensitive, but that lets you save 15% off your first month or year of Trade Ideas or upgrade from standard to premium. Any questions, email us, info@trade-ideas.com. That goes directly to our help desk. It's the best place to contact us. You can also follow Steve on Twitter @TodayTrader or follow our @TradeIdeas account. On Facebook, we're Trade Ideas Pro. So follow that or like it to get updates and share those with your friends. Thanks, Andy and Steve. Have a good one.
All right. See you guys next time. Thanks.